Hello everyone, my name is Frank Boehme and I'm heading the investor relations activity at Mister Spex. Welcome to the recap of our Q1 performance. Q1 was a challenging market environment for consumer retail companies overall. The performance was impacted by COVID in Germany, with traffic being down on the high street and in shopping malls, as well as high absence rates in our own operations due to quarantine regulations. In addition, the war in the Ukraine and increasing inflation weighed on consumer sentiment. GfK consumer sentiment was down in Q1, and this was also reflected in declining Google search trends for prescription glasses. We use this as an indicator to see how much traffic is available online. GfK data for optical retail in Germany for January and February shows that the entire market is still below 2019 levels, while in ordinary years, the German eyewear market was growing between 2 to 4%. This challenging market environment is also reflected in the performance of our stores. Our stores are located in high traffic locations in shopping malls or on the high street. Traffic is still significantly below 2019 levels, but we were able to compensate this with significantly higher conversion rates, leading to a net positive effect on revenues for our 2016 to 2018 store cohorts. To further improve traffic in our stores, we tested a number of different initiatives. Things that worked well, we continued to do. For example, our TV spot has a substantially higher share of store-focused scenes, raising the awareness for our 57 retail stores by now. We also used more offline marketing around our stores to activate customers and drive traffic. These campaigns already show a very good return on investment. Our store rollout also continued in Q1 with 4 new openings. We are sticking to our guidance to open around 20 stores this year. In addition to the 4 stores we opened in Q1, we have already done 5 openings in Q2. We also secured a first location in Switzerland for later this year to further expand in international markets. To deal with underlying cost inflation, we have selectively increased prices. We started to increase multifocal prices first and have done this in Germany and Austria in February. We also just recently increased prices for single vision, and we have seen a positive impact on overall gross margins within the product categories. Exciting news on Tribe. We have been invested in the company since October 2020 and now acquired the entire company. Tribe focuses on face scans to measure various data required for frame size recommendations, but also pupillary distance and segment height measurement. We will integrate the company into our own tech platform to create further value for our customers. Coming to the financials, we have grown 6% year over year and even 35% on a 2-year stack. The comp base from last year was elevated with 27% growth. Performance in Q1 was also impacted by declining consumer sentiment and rising inflation, but also high sick rates in our own operations in the magnitude of 20 to 30%. Taking a look at product categories, prescription glasses remain stable, driven by a certain online fatigue in the online segment, compensated by brick-and-mortar retail. Sunglasses were up 8%, which is a good development considering a strong comp base from last year, where the sunglass season started earlier due to more favorable weather conditions. Contact lenses continue to recover with 13% growth. More customers go back to work and the office and social events return, which drives contact lens revenues. Coming to our key customer metrics. Active customers increased by 7%, mainly driven by our fairly high repurchase rates, but also good new customer development. The number of orders increased in the same magnitude, up 6%. Despite the declining share of prescription glasses in the revenue mix, the average order value increased slightly by 1%, driven by a higher average order value across all product categories. Looking at our 2 reporting segments, Germany benefited from mid-double-digit growth in our brick-and-mortar business. From a product category perspective, sunglasses and contact lenses were growing double digits, driving growth in the German market. In international markets, we do not have so many stores, so we did not benefit to the same extent like in Germany from the recovery of brick-and-mortar retail. From a product category perspective, contact lenses were the growth driver behind the performance. Coming to the remaining P&L items, the gross margin declined by 240 basis points due to a lower share of prescription classes in the product mix. Going forward, we expect the gross margin to increase, driven by the acceleration in prescription classes and sunglasses, outperforming contact lenses. The price increases that I described earlier should also help the gross margin development. Personnel expenses increased by 37%, but we had a couple of special effects resulting in the increase. The comp base from last year was particularly low due to short-term work, and we also had a major store rollout in the second half of last year, which was not in the comp base. Without these effects, we are talking about a low teens increase of our personnel expenses. Other operating expenses were slightly up by 5%, driven by higher marketing expenses. The decline in gross margin and higher operating expenses resulted in a negative adjusted EBITDA of 4.6 million euros. So what does this mean for our full year outlook? We are confirming our guidance of a moderate double-digit revenue growth that will be slightly higher than the 18.2% we had in the previous year. For adjusted EBITDA, we continue to expect an increase above the level of 4.1 million euros that we had last year. While the Q1 performance was slightly behind our expectations due to declining consumer sentiment and rising inflation, we are now expecting a strong acceleration in revenue growth in the second half, driven by prescription classes, the highest gross margin category in our revenue mix. And this will help us to achieve our full year guidance. With this, let me close my recap of the Q1 performance of Mister Spex. If you have any further questions, you are always welcome to reach out to me. Thank you.
Since you watched this company video until the end, I'm guessing you liked the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.